All right, we are back. We did it. We did it. So I wanted to because it is showing me live on Facebook this time. I did check that. So let me go in and see if we can get this shared on Facebook. It's showing that I'm live. There we go. There we go. All right, so give me just a moment. Hello, y'all. Hello. Now it's showing that I am live. So hello, how are you all? Hope all is well on tonight, this evening. I'm going to take just a moment to share this and then we're going to introduce our guest speaker this evening and we're going to jump right into it because we tried to get here at 7 o'clock. We were here at 7 o'clock actually, but due to technical difficulties, we were not on live for whatever reason. It had us on Instagram live, but I need for us to be on Facebook and Instagram live so that I can talk to all of y'all at the same time. So, got that all situated. And we're gonna get this shared out. Um, All right, so we did get this shared out. If you are on live, please feel free to share this out. You never know who's looking to buy or sell and have not told you. But you don't want your friends out here buying and selling real estate without proper representation, right? I know it. So let's go ahead and get this shared out to those that may be wanting to learn about buying and selling and what they need to do. So all righty, we are ready to get started, Mr. Gary Marshall. Whenever you are ready, you can go ahead and introduce yourself to the people, and I will be doing the same here on my TikTok account. We'll be introducing them to you there as well. So you have got the floor, Mr. Marshall.
Thank you, Miss Conley. As usual, it's a pleasure to be with you this evening. We've done several of these in the past, and I hope we have helped several people along the way. Again, I am Gary Marshall. I am branch manager with Mortgage Solution Financial here in Tupelo, Mississippi. And just look forward to being with you tonight. And we're going to be talking about VA loans. I like talking about VA loans. VA loans. Let's talk about our veterans for a minute. We have several things going on in different countries, all around the world. And when it comes to the home buying process, we have a USDA loan, we have a conventional loan, we have a FHA loan, and we have a VA loan. But not many people know about how easy it is to get a VA loan. And from what I have seen in my 20 years in the business, the veteran is the one that's always seen to be left out of the home buying process. So the last past year, I've been trying my best to get the word out that it's not that difficult for veterans to get a mortgage loan. Matter of fact, it's almost like getting a conventional loan, but many veterans do not know about it. So our purpose here tonight is to let everybody know how easy it is to get a VA loan. I want to start by telling you one of the things that's great about Mortgage Solution Financial and VA. You don't you can get a VA loan with no minimum credit score. All right, Gary, what you talking about? No minimum credit score. All right, you can have a score in the 400s and you can still qualify for a VA mortgage loan. Basically, what we look for here at Mortgage Solution Finance is no 30-day lates in the last 12 months. Does that mean that we're going to not do loans for people that had 30-day lates in the last 12 months? No, but it's got to be extenuating consequences, something related to sickness, There are things that automatically change your life in the process in a negative way. So very easy to get a VA loan compared to other type of mortgage loan. Okay, well, what is required to get a VA loan? Well, what we look for with our veterans, we can easily find out. All we need is your DD 214. And for those of you that don't know what a DD 214 is, it's your military discharge. It's a personnel record. Everyone that's been in the military have a personnel record. Everyone have a personnel record on your job, but in the military, they refer to it as a DD 214. And if you got a DD 214, we can get your certificate of eligibility, and your certificate of eligibility basically tell you, if you're going to qualify for a VA mortgage loan. The certificate of eligibility, you can obtain that yourself through the VA portal online, or depending on your lender, we can get that certificate of eligibility for you. Okay. VA loan, it does not have DTI overlays. Okay. But it's 65% DTI overlay with us. What does that mean? That means that for your debt to income ratio, VA is pretty lenient on that. Matter of fact, they're not gonna, you know, when you go through the portal, they're not gonna just deny you on DTI, through VA. However, you may have a lender that they have their own DTI overlays in place. So just because one lender don't have DTI overlays or guidelines in place for debt to income ratio, it don't mean the other one have or might not have it either. So good to know. There's no down payment when it comes to VA loan. Yeah, you're probably gonna have to contribute to closing costs. You're gonna have to pay for your appraisal, pay for your inspection, pay for your honest money. There's still third party fees that you gotta take care of, but there's no down payment. So I want to make sure that everyone understand that. It don't mean you don't have to come up with no cash money. Just means there's no down payment. Okay. There is no mortgage insurance on a VA loan. That's right. No PMI added, and that's a good thing. Mortgage insurance is usually added on all FHA loans. They're added on most of the conventional loans, USDA loans, but on VA you don't have to worry about uh, MI mortgage insurance. But they do have what they call a funding fee. Okay, now if you're fully disabled, 90% or more, you will not have to pay that funding fee. Okay, fully disabled, 90% or more, you do not have to pay the funding fee. If you're working and you got a job and you're not 90% or more disabled, you will have to pay the funding fee, but it's added into the loan. You're not going to have to pay for it, up front. And if you're disabled, you may not have to pay property taxes when you file for homestead either. You're just going to have to show proof that, that you're disabled and, go to your local courthouse and look into that. There are closing costs associated with a VA loan. Best thing to do is get with your real estate agent and discuss those closing costs with your agent. One of the key things that we've talked about for the last part of the year, big question I always have: what about spouse? What if the veterans do stay in the military, come out, live everyday life, and they pass away? Can the spouse apply for a VA loan? Yeah, spouse can. And there's several ways to get the certificate of eligibility. One of them, you have to have at least one of the four that I'm going to name. Veteran is missing in action, or the veteran is a prisoner of war, meaning POW. The veteran died while in service from a service connected disability and you didn't remarry, or the veteran died in service or from a service connected disability and you didn't remarry before you were 57 years old or before December 16th, 2003. Or the veteran had been totally disabled and he died, but the disability may not have been uh, the cause of death. Okay, and military related. So there are several reasons. One of those that you can get a spouse can get a VA loan. So if you don't remember all that mumbo jumbo, best thing to do, just get with me. And there's a form that has to be filled out. And once we get this form, it's usually given by the lender. I can get this form out to you, and you fill it out, and we'll send it in and see if you can be approved for a VA loan. And the name of that form is VA Form 261817. I'm going to say that slowly. Spouses, the form that you'll need is the VA Form 26 1817. And it can be available for download if you go online, or you get with your mortgage lender, and we'll see about getting that form for you. So, not a difficult process. And rates, well, it's just like any other mortgage loan when it comes to rates. Uh, Even though you may qualify with a score below 500, you know, I'm just gonna keep it real with you because this is what Levita and I do. We tell it like it is. We're transparent. Your bad credit costs money. You know, I'm just being real with you about it. If you got a score below 500, you may have to pay some extra discount points. Maybe we can work some in your closing costs, or maybe you may have to pay that up front. But if you get a VA loan and your neighbor get a VA loan, you may not have the same rate that your neighbor have because it's all mortgage loan are based on credit, and it's also based on your ability, you know, to repay it back. So these are just some things to keep in mind. But if you need a VA loan and you'd like to, talk to me more about it, you can contact Levita or contact myself. My number is 662-266-1109. And this is my mobile number. And when I say I can be reached outside hours, I can be reached outside hours as long as I'm not in church on Sunday morning. You can pretty much reach me anytime, and I don't mind talking to you about a VA loan and how to get pre-qualified for a VA loan because too many veterans are being left out of the home buying equation. Too many, and we need to get more veterans into the home buying process and in homes. I mean, if you're gonna go out and protect your country, the least we can be able to do is provide you with a VA loan without you having to go through a whole lot of unnecessary actions that you don't have to. And that's basically what I wanted to talk to you about tonight is VA loans, and I'm open to any questions that you may have.
Okay, so Gary, I wanted to go back. Good evenings for those that have been able to recently jump on. Just wanted to do a quick recap for you of what the discussion is tonight. And we are talking about VA loans and VA loan qualifications. And we want to answer any loan questions you all have regarding any other format of loan. But we definitely wanted to make sure that we get this VA information out because a lot of VA borrowers are, I know they think that they have to go to a lender that has VA in the title because I get a lot of referrals from lenders who have VA in the title and they're not local lenders. And I definitely have had um good luck, so to speak, with working with them, but not 100% of the time. I have had some that did not work out using these lenders that were not local. So I definitely wanted to let my VA clients know that we do have local representation for you, lenders that offer VA loans. You get that once you get that certification. Correct me if I'm wrong, Gary. Once they get that VA certification, they can bring that letter to you and be get financing through you. Am I correct in saying that?
That's correct. If they don't have that VA certification, which is a COE referred to as a certificate of eligibility,
That's it.
all I need is a DD 214. I take care of the rest.
Awesome. So they can come, you all can come to a local lender that's familiar with the area. And I've done videos expressing the pros of working with your local lenders in the area with your purchase. But VA borrowers, he's already let us know that you can borrow. There is no credit score requirement with Mortgage Solutions Financial, so you can apply there regardless of what your credit score is. He's also let us know that the lower your score, the more money it's going to cost you. But allow that not to be a deterrent, because here's the thing: a lot of people will charge you to help, air quotes, raise your score, and then in the end that process not work. I've seen so many times where buyers will be paying $200 a month for a whole year to lower their score, I mean, to raise their credit score, and in turn at the end of that year they find that nothing has happened with their credit score, and that's $1,200 that you could have added to your already savings for purchasing a home and going ahead with the credit score that you have and purchasing a home. So don't allow that to be a deterrent for you. If you are ready to buy a house, the best thing to do is to go ahead and have the conversation with the lender. So now you know, you talk to a specific lender and say, hey, and they told you this is what you got to do. Now you go back and do that and then come back to this lender and say, okay, I've got this done, and they can finish you on out, versus going and spending money somewhere when you don't know that it's gonna work. Okay. But I got off on a tangent. My point was that Gary has let us know that they do offer loans with no credit score requirement. He's given us the pro of having this loan with no mortgage insurance attached to it. And mortgage insurance, by not having mortgage insurance, that's going to decrease the amount of money that you pay on your mortgage. So that's what you basically need to understand what mortgage insurance is. So that eliminates that. And if you're 90% disabled or more, it takes away, what was that you were telling us, Gary?
If you're 90% or more, you don't have to pay that funding fee.
That funding fee, which all we want all the monies off. We want all the monies off. So the VA loan is definitely good for veterans. Contacting mortgage solutions. That DTI is another thing that was a good thing, because they give you a little bit more leniency when it comes to DTI. Now, I always explain DTI when we talk about, anytime we bring up DTI, I like to explain what it is and how borrowers can calculate their DTI on their own. And that's debt versus income. So you take your debt divided by your income, right? And that's gross income. And you're going to get that percentage. We talked about 65%. Did you say, Gary?
Yeah, 65% DTI, and that is a mortgage solution financial overlay. But VA don't have any debt to income ratio. They don't have any overlays on it. It's just your lenders will have an overlay.
Okay, so with that being said, you may find a lender that will loan to you with a debt to income ratio of 90%.
A hundred
But
percent, yeah.
so with mortgage solutions, it's 65%. Now,
Mhm.
Gary, I want you to back me up when I'm saying this. With FHA and USDA, that number is far lower. Am I correct?
For lower USDA, that total back end is like 41% on the back end, unless you approve eligible, which means you go to, I believe it's 44.9 on the back end. FHA, if you approve eligible, it's like 56.9% on the back end. So VA is let you have more debt allowed than any of your other loans.
Okay, so that's most definitely something that you want to take advantage of if you are a VA. Now, Gary, this is just for my information because I'm not sure. Do you know how long you have to serve in the military to qualify for VA?
I don't know how long. I believe the National Guard and Army Reserve is around 6 years. It may be 3 years for active duty. But what I always tell my buyers when they ask that question, just let me have the DD 214 because I can usually get the certificate of eligibility sometime the same day or the next day, and it's gonna let us know, if we can get it. If we can't get it, it's gonna let us know that we short of time, and it's gonna let us know how much time is needed. And that way, we don't give out the wrong answer. We just get the DD 214 and order the certificate of eligibility, and let it be no mistake. We find out right there on the spot.
Gotcha, gotcha. Okay, let me see. I was trying to Google it. So let me ask this question.
Mhm.
Let me ask this question because I want to know too. This is for active and ex-military. Am I correct?
That is right. This is for active and inactive. Because
Okay.
our both of them gonna have DD 214, whether they're active or inactive.
Okay. So if you are a VA, if you are in the military or you are the spouse of someone in the military, and you're looking to purchase a home, you definitely want to I'm sorry, I'm working our comments too. You definitely want to reach out. I put his number in the chat. You can also reach out to me. Let's have a consultation, get you set up, and get you all squared away to take advantage of this VA loan. So just remember, according to news articles, those rates are slated to be dropping a little bit next year. I'm excited about it. I don't know if Gary's excited,
Very
but
excited.
but I am excited about these interest rates coming down on next year. I know that that's going to saturate our real estate market a good bit. So having your finances set up and in order and solid is a great attribute, and it looks good to sellers. Now let's talk about this, and I don't know if we switching lanes. I feel like we're in the same lane, but we may be switching lanes a little bit. There is something that buyers can do, taking it a step further. Am I correct? By sending all their documents in and go ahead and having that sent to underwriting so that they can get a what is it called? A commitment letter,
You
maybe,
know
or
what? Yeah, let me talk about that for a minute. You brought up a very good point, and this is a point that needs to be discussed, especially when dealing with Mortgage Solution Financial. There's two things you have. You have a pre-approval letter, and you have a loan approval letter. When you get to when realtors go and talk with you, they want to have a pre-approval letter, to show that you can, you've been pre-qualified to buy the home, and they're not wasting their time, okay? Because this is what they need to show, show to the seller, when they get ready to, bid on the house. But here's one thing that we do: we take it a step further at Mortgage Solution Financial, especially with the VA loans and on all government loans. We do this. What I do is I get with the client, I give them a list of items to get to me. Once you get me this list of items, I'm going to take that. I already have ordered the verification of employment, and I order a CAVERS, which a CAVERS shows if you've been defaulted on a government loan before. I'm doing all this in this back scene. And what I'm going to do is when you submit those documents, I'm going to send it straight to underwriting. I'm going to bypass processing department altogether. I'm going to send it straight to underwriting. And what they're going to do is they're going to either issue me a loan approval or they're not. And if they don't, they're going to tell me what we need to do to get the loan approval. And basically, that's putting the realtor in a stage to win, a success. That's building them up for success because it's easier to present an offer when you got a loan approval than it is when you got a pre-approval. The loan approval means that the file has already been reviewed by an underwriter and they've signed off on it saying you approve for the loan. And that's what we do. We try to do that on every file right now.
And also by doing that, doesn't that cut down on the amount of time it takes from contract to close?
Absolutely, because by the time we get the contract, we got the income and the asset documents because the underwriters already reviewed them. So basically, what we're doing is just taking the purchase contract, we taking the title, we taking appraisal, along with the condition we already have, and we sending it in, uh, not just for the underwriter to review, but to issue a clear to close.
And those are the type of things that are going to be necessary when this market does what we already know it's going to do next year. This is going to position you to be more aggressive in the offers that you are making. I have tons other tips that I give and strategies that I utilize for my buyer clients in order to make our contract stand out amongst others. But I just wanted to throw that one out there since we had the lender on the line so that he could vouch that what I'm saying is indeed true. When and anytime if you can cut down the time to close by 2 weeks by simply going ahead and having your documents ready and going ahead and being able to get that loan approval letter versus a pre-approval, then that helps you stand out when you're making an offer. Because what a pre-approval says is pretty much, hey, based on what they told me, we could get them a qualified. Now they hadn't shown me anything, but based on what they've told me, we can get them qualified. And then your loan approval says, hey, we've submitted their documents to our underwriter, and our underwriter has approved their part of the thing. Then we've got the only thing left is the property side. So we've got to make sure that the property appraises, that the inspection on the property is done right, and that everything passes on that the title on the property is good. So we've done your end. You as a buyer, you're good. As long as this property works out, then we can move forward with it. And that again helps you stand out. And that's what you're gonna need in this market, because the market is about to move. It's there's a lot of people that have been waiting on these interest rates to do what we know they're about to do. So if you can go ahead and get out there and take advantage of this VA loan, then most definitely go ahead and do that. Now, if you have any questions regarding the VA loan, by all means, please feel free to ask them. However, I have a lender on the line, and I don't like to let my lenders get away without asking the money questions because I get a lot of money questions. And although I know a little bit about it because I've asked Gary, y'all, when I tell y'all I blow Gary line up like it is nothing, I I'm telling you, I will call Gary at the drop of a hat and he will answer my questions. He will say, and he's not going to make up an answer. That's what I like too. I don't like nobody to just make up something and tell me anything. You're not going to make it up. If it's something we don't know the answer to, he'll say, well, I don't know, Lavita, let me get back to it. And he's going to get back to it because he'll send me articles and, hey, this is the answer to what you was talking about. I'm still looking into it, but I want to let you know that I'm looking. So that's what I like. And I like a lender who can communicate with me on what's going on in the process, good, bad, or indifferent. Let me know what's going on so I can kind of be ready when these clients get ready to blow up. Because y'all will blow up on us. So we have to be ready and on alert and be ready with a solution by the time, that happens. So anywho, because I didn't got off again. But I wanted to make sure I asked the money questions while I got you on here, and I'm not gonna hold you too long, but I want to know because somebody asked me just today. So I'm gonna always put this in anytime we're talking to a lender. If I want to buy a house, what do I do? Now, the first thing I do, the first step of the process is getting the finances together. So since we're on step one, because that's step one, And also, I want to know what if they're not ready. So I'm gonna let you answer that. What is the first thing they need to do? I'm saying handle your finances. So now, after I've given them your number, because that's what I'm gonna do, I'm gonna say, hey, here's a list of lenders that I like to use because I know that they'll get the job done. Give them a call. So now they've given you a call, Gear. What is that first, that initial conversation with you like?
Okay. And Levita, I get this question every day. I get it every day. First thing I'm doing, I have several things that I like to email the buyer out so they can have something to read on their own. But if you want to get a home, the best thing to do when you start out, you got to start paying down that debt. You got to start paying off that debt. And that could serve two purposes. One is to raise your credit score, and the other one is to lower your debt to income ratios. You got to do both of them. Okay. All right, you got to put away some money for a down payment and other expenses related to purchasing homes, such as appraisal, closing costs. Even if you're getting a loan with no down payment, you need to have some money. Underwriters want to see how you live, and the only way they're gonna see how you live is how you spend your money. Okay, now let me put this out here. Gonna be some people I might make a little irritated, but I'm getting ready to put this out here.
Go ahead.
All right, uh, people can't live in a vehicle. Okay, you can't do that. You can't live in a vehicle. And what I'm saying by that, if you want to buy a house, don't get the car first. Because if you got that $900 or $1,000 payment that you're making to buy that vehicle, that could go on the house. Because even though the rates are going to be dropping, the price of homes is going to be going up. Why the price of homes going to be going up? Because there's still a shortage of housing. Everybody wants a place to stay. Even if you rent, it's gonna be going up. You gotta have a place to stay, and everybody know it. There's a shortage of housing, and you're gonna have to pay for it. Okay, even if you're getting a loan where you don't have a down payment, look, you need to put some money away. Okay, if you're making $5,000 a month, and you got a husband, both of y'all making $5,000 a month. One put up, one save, one spend. Work together. Single parent household, things that we don't need to do. We might have to give up to Netflix, might have to give up to Amazon Prime. We might have to give up some of that eating out and stuff. But to be a homeowner is a sacrifice. You have to sacrifice something. You got to give up something to get something. Have y'all heard that? Well, that's what you have to do if you want to if buy a home, okay? You got to prepare your documents. If you want to buy a home, you can't say, "Well, I filed my taxes, but I don't know where my W-2s are." You got to get your documents together. You got to get your W-2s together. You got to get your pay stubs together. Get your tax returns together. Go ahead and check your credit. And don't go to Credit Karma. Go to myfico.com. myfico.com. The credit report that you pull from myfico.com is going to be almost the same as what we as a mortgage lender is going to pull. Yeah, it's not free. It's going to cost you. But some of the better things in life is going to cost you a little something. So go ahead to myfico.com and get your credit pulled. Know where your driver's license and your social security card is. Know where your birth certificate is. Be able to put your hand on those documents so you can have them ready. I mean, if you want to buy a house, that's a process, and you got to get with the process. Okay. Levita has already explained to us how to calculate uh, debt to income ratio. If you got any derogatory debt, pay it off. If it's non-medical, go ahead and pay that stuff off. Lenders are not too concerned with medical collection, but if you got something non-medical, you made that debt. Come on now, go pay the debt. If you have to make
And
arrangements to
pause
pay the
to
debt,
say
yeah.
yes, because sometimes they'll give you a settlement. But what about old debts? How far back do they need to go back with paying debts?
I would say go back up to 2 years. Go up to 2 years. Anything after 2 years, I really wouldn't too much be concerned with because Lenders, underwriters are not really going to pay attention to what you've done 10 years ago or 7 years ago. They want to know what you're doing now. You know, they want to know that bad credit, that bad debt you didn't pay off, several months ago. You know, when you bought that four wheeler and you paid one payment and you let it go. That's mostly what they're concerned with. They want to see what you're doing right now. If you got student loans, you need to go ahead on and put them in an income-based repayment plan. Okay, if you in a repayment plan, if it's zero, the lender is gonna use a 0.5% or whatever your loan balance, and they're gonna add that to your debt to income ratio. Okay.
I want to pause there too, Gary, and because I don't want to assume that everybody is gonna income based repayment means they're gonna base it on your income. If your income is $120,000 and they pay me $200, you need to be paying that $200 payment because if that income based repayment plan is not gonna be beneficial to you. But whatever status of your student loans are, you need to be making sure you're on top of that.
Right.
Okay, and understand they take a 0.5% because sometimes I don't know everybody's situation. I'm not gonna assume that. I'm not gonna assume your situation because a lot of us doing real good. So we need to be making sure we stay on top of those student loans, whatever the need, whatever it may be. Because the income based repayment plan is not the only payment plan that they have. They have
Mhm.
several levels. So whatever level you're on, you need to be making sure you're on top of your student loans to make whatever payment it is you're making for that and adjust accordingly.
And
Okay.
that includes VA loans as well. And you want to get as close to that 640 credit score as you can. Is 640 considered a great credit score? 640 is considered a decent credit score. Why is it only a decent credit score? Once your credit score go to dropping is below 680, that's when you're gonna see that interest rate go to ticking up. They have a cap. It starts above 720. It's okay. After it drops below 720, I think it may drop maybe an eighth of a point. After you get below 680, it might drop a quarter of a point. And once you get below 640, it just might drop a half of a point. It's just going to keep dropping. So if you want the best payment, the best interest rate, you need to you need to get above. You need to be around that 680 mark. I definitely wouldn't get below 640 because when you go to getting close in that 640 range and less, you're gonna start paying more for your money.
So what you're saying when we see interest rates advertised, and say for instance we see somebody advertising interest rates of 6%, they're offering 6% for the higher credit scores, and that interest rate goes down up as their credit score comes down.
Right. That's absolutely right. That's how a lot of people when they get ready to shop for a house and they compare, they might pay 8% compare that 8% rate to somebody else 6. But you can't compare apples to oranges. If you got
Mm-hmm.
a 620 and somebody else got a 720, you're not gonna get the same rate they got. You're not gonna pay the same points they pay. If they got reserves and you don't have any reserve, their rate's gonna be a little better.
What are
Because
reserves?
reserve monthly payments that's going to be your payment, your house payment plus your insurance and your taxes and your PMI. We call that if they say they want 2 months reserve, they want to see 2 months payment saved. If they want 6 month reserve, they want to see six months payment stashed away just in case something happened on the job, and you need to change jobs or something like that. So if you got reserves, a big 401k, you got money in your savings account and somebody else don't, your rate's gonna be better because your liquidity that you have. You got more liquidity that you can show, and the pricing of your interest rate is gonna be better. We call it uh, risk based pricing, and all that risk based pricing mean, hey, it just depends upon what kind of risk you are.
Yeah.
You
The
know?
bigger the risk, the more money it costs.
Yeah. Uh huh. Absolutely.
So I heard you mention 401k. So a person could use their 401k. count their 401k as reserves even though they don't have like physically have it? Like, do they have to pull their 401k down in order to count it as reserves, or can they count it
No, we gonna
without
count it. You know, if they don't have to use it, if they got money to use without having to dip into it, we just gonna count that 401k as reserve.
okay, okay,
Hmm.
got it. So keep that in mind that your 401k can be usable without you having to pull it down if you have cash on hand for what you need your cash for.
Yeah, we call it a compensating factor in the lending business.
Okay. And I always want people to know this information so they'll kind of know what they, because a lot of people get so caught up with what they think buying a home is, and just absolutely they just don't even try, not realize that you're on the brink of being able to afford a home. And I'll keep on telling people the prices of houses, they're going up. And as we see, housing became less affordable for a lot of people after we came off that 2 to 3% interest rate, because of what went on in the market, the prices jumped up. It's like we skipped 3 steps and just jumped all the way up until that step, and it made housing unaffordable for a lot of people. But we are kind of settling, and the interest, I mean, the price, the value of property is going up the way it should go up now. So it'll, this is a point where it's afford, like if the cards are right for you, now is the time to purchase. If they're not, then it doesn't matter what's going on in the real estate market. If you don't qualify for a mortgage, like nothing else even matters. Don't matter what interest rates doing, don't matter what the price of the house is doing. If you're not positioned to purchase, then none of it matters. None of it matters. And that's just the truth. That's just the truth of it. But it's important that you talk to somebody, a professional that knows, so you know where you stand. Because a lot of us are standing in the dark, not realizing that we could purchase a home. And also understand that rent is going up. These homes that we're seeing, I'm just gonna say this. The homes that you all are looking at that are 180, 220, and y'all are saying, I don't want to pay for that. Like, I'm not gonna buy it. If it's not what I want, then I'm not gonna buy it. Then in 6 months, you find yourself renting these same houses at the same rate, at the same amount your mortgage would have been in that house, and you find yourself stuck in this house anyway. So although you did not want to buy it, you could have bought it, you didn't want to buy it, but now you're stuck renting that same house. And you still end up in that house 3 to 4 years because you had to wait on the market to do whatever it do, and you get back in a situation where you could purchase again. So when in actuality you could have bought that house, stayed in that house 4 years, got the equity out of that house, and then purchased the house that you did want. So a lot of us don't want to. We want to jump out there real big, when it's that's not always reality. Now I'm not saying that it can't happen, but I'm saying in a lot of cases we're not thinking it all the way through. And I'm doing these lives so we can think it all the way through and look at it from a logical standpoint versus looking at it from an emotional standpoint, or what you think people expect for you to have. If you're gonna bypass this $220,000 house because it wasn't exactly what you wanted, or wasn't big enough for you, and say, "Well, I'll just wait and I'll buy later," and then end up having to rent a house that looks just like that for the same amount you would have paid mortgage, and stay there 3 to 4 years, you cheated yourself, because you could have bought that house, stayed them same 3 to 4 years, gained the equity out of the house, and then use that equity to pay for the next house you want. Instead, you help do the same thing for somebody else who's going to take the equity out of that house, buy another house, and then let somebody else do the exact same thing that you just did. Now that there, you can take that and put it under your pillow somewhere, because that's gonna help you in the morning. But
Along
anywho,
with a cup of coffee.
Yeah, cause that was good, girl. I don't even know, Vita. I don't know where it came from, girl. But you gonna sit down, cause that's for real. That's for real. You gonna either pay your mortgage or somebody else's mortgage. I'm giving you tea this evening. I'm giving you tea. It's cold outside. You better take the tea because these rent prices are going up. They're going up. But anywho, so Gary, basically what you said is the same thing I tell everybody when they call me saying they want to buy a house. I tell them to lower their debt, raise their score, and save money. Those are the three things. If anybody, and if you on here and you're watching it, I need for you to concur that that's exactly what I say in all of my videos. Raise your score, lower your debt, and save your money.
That's
Those
the
are
only three things you got to do.
that you
That's
need to
all.
do if you're looking to purchase in 2024. And like he said, if that means you got to give up going out to eat, and truthfully, if you can't give up a $40 night out, then you may not be ready for home ownership. That's just the real on it. And if you're not ready, that's okay. That's okay because I work with investors every day and they want to buy houses that they can rent out. And so if rent is where you want to be, I promise you I'm okay with it. But when you're ready to buy or sell, we'll have the conversation. And I just want y'all to be ready and in position when you're ready to do that. So save your money, lower your debt, raise your score. And as he said, as you lower that debt, your score will come up as well. So
Absolutely.
those are the three things you need to know. And we talked about VA loans. If you need to go back, listen to the video after it ends, it will be available for you to replay it. Gary also offers FHA, USDA, and conventional loans as well. Gary, I'm gonna ask this question. I'm not sure if you offer this. I don't think you do. I think I asked for the 203K loans. But I
Right
don't know if
now,
you do.
not currently. Not currently. Some of the offices offer the 203K, and some of them are not. At the time, my office is not. Hopefully, this will be something that we will be offering in 2024.
Awesome, awesome. I'll do another video to even explore what that even is because there's some other overlays that have to be done with
There's
that.
a lot of moving parts with that 203K.
Yes, 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 Lord. Yes, Lord.
I could do it, but for me to attempt to do one and mess it up, I'd rather let some other experts tackle that and let me stay in the
Mhm.
box where I'm an expert at. And 203K is just not one of them at this time.
Yeah, that box is pretty big that you're in. So we're but yeah, again, we're gonna go ahead and finish up because like I said, I don't want to hold y'all all night, but I definitely wanted to get that information out there. I don't see any questions in the comments. So but I do appreciate you all jumping on. I do appreciate you all listening. I truly hope that this has been something that has been helpful to you all and encourage you to go ahead and get prepared to purchase in 2024. I'm telling you what the market is going to do. However, I never want that to um, strike fear and prevent you from wanting to purchase because when it is I'm a firm believer of what's meant to be will be. Okay, I pray all the time. I'm a strong believer in God and what God can do. If you know me, you know. But so when it's your time, it's definitely going to be your time, and there's nothing in this world or no circumstance that can stop it from going down. But my whole purpose of giving you the information is to educate you on all aspects of the home buying process. And also this information is good for sellers to know as well so that kind of know what buyers are looking at and what to expect because a lot of sellers don't know that there's a pre-approval and there's a loan approval. And if you don't have a realtor that's telling you this, then you may blindly accept one offer, not realizing what you have, So looking at the amount is not always the only factor that needs to be taken into consideration when you are looking at offers.
And it doesn't take that long to get a loan approval. I could probably get a loan approval quicker than I could a pre approval.
Okay, okay. So when y'all get ready, because I know, I mean, most people already at this point know what documents they need. And if they are ready to purchase, they likely have those documents. So when you're doing your application, and a lot of stuff is online now. So when you're doing your application, all you got to do is upload. Go ahead and get all that done at the same time and go ahead and, find out what the lender can do for you. Go ahead and find out. When you reach out to me, I send over an email with what to expect. All of what we've talked about tonight is in there, along with some other things that you can expect from working with me. So if you all are looking to buy or sell real estate in the next ever, give
Mhm.
me a call. Let's go ahead and have a conversation. I do offer consultations one on one. Um, Yes, I do offer one-on-one consultations. I'd love to have a conversation with you about your real estate needs. You all know how to reach me. This is actually my business page. If you are here, you have all the contact information from me that you need. I'm going to let Gary again tell us how to contact him so that you all will know how to contact him. And of course, if y'all call me, you can reach him as well. So, that even if you don't get the information here, if you got my information, you definitely have contact to Gary. But Gary, if you will share with them how they can reach you again.
The best way to get a hold of me is just call my mobile number 662-266-1109. If you can't call me, by all means, drop me a text. And I'm very quick to answer both. And I look forward to hearing any of your questions or concerns.
Awesome, awesome. Well, I want to thank y'all again for jumping on with us tonight. It has been awesome. I'm going to go ahead and get off of here and finish my night. I've got a couple other things that I need to get done. I want to congratulate my clients today who were able to get their home loan closed. I want to remind y'all that I have several listed, including some investment properties listed there in Grenada, Mississippi. If you are interested in any of them, you can check my website or any properties, www.broconrealtygroup.com. You can connect with me directly there. I've also got a monthly newsletter that I've started. It will go out at the beginning of every month. If you'd like to sign up for that, you can send me your email via message or DM it to me or however. This is a once a month email to keep you abreast of what's going on in the real estate market, real estate tips and background in the, real estate background, real estate knowledge. If you want to sign up for that, just send me your email. This is not a spam email. This is not a spam tactic. Understand you're going to get that one email unless you ask me for something else. That's all you're going to get from me because I'm trying my best to keep up with everything. So, spamming is not something that I will be doing. However, if y'all need me, you know how to reach me. So until next Monday, 7 o'clock, meet me here. As long as I don't have any technical difficulties, we're going to go right on through it. I will let you all know who my guest speaker will be next Monday as well. Thank you so much, Gary, again for
Thank you
coming
for
and
having me
talking with
again,
me.
Miss Conley.
Yes, yes. And if y'all have questions for either one of us, you all know how to find us. Also, you can drop them in the comment section of this video and I'll get back to you with an answer. So, if that is all, y'all have a great night.